Well, for the October policy, well, Latina poll does suggest that RBI may still keep a status quo on interest rates this time. RBI may keep a status quo on the repo rate as well as the reverse repo rate this time, but still maintain an accommodative stance. What will be important also is what the RBI projections are in terms of the GDP for FY21 and also updates on the inflation this time. Having said that, we have also seen that RBI has only so far stated that FY21 GDP is seen contracting, and hence projections by RBI this time in terms of GDP as well as inflation would further give more clarity to the market. Having said that, the entire rationale for a status quo this time is the fact that RBI has already front-loaded rate cuts. RBI has cut rates over 200 bips since the start of 2019 itself, and over 100 bips since March itself, and hence this time possibly we may see a status quo on rates. The fact being that inflationary expectations to remain fairly high in the economy. CPI inflation has remained over the 6% mark for quite a few months now, and also economists do expect inflation or inflationary expectations to come slightly lower only over the course of the next 6 to 12 months, and hence India is now in a stagflation kind of a situation, and hence the need for a status quo on rates. While the policy rate transmission has been good initially, the rates still need to be fully transmitted in the overall system. Besides that, of course, the entire RBI's commentary in terms of the growth inflation dynamics would be important. Growth recovery challenges to remain, but high frequency indicators are showing some positive signs there, and hence RBI's commentary in terms of recovery would be fairly important. The need for fiscal stimulus has been called out for from quite a lot of economists, experts, industry voices, but of course the government has limited space, and hence RBI's commentary on that, along with the options that RBI has, along with the option of deficit monetization, are they going to consider or not? That would be important. RBI has so far also managed the yield by absorbing borrowings. Clarity in terms of RBI's policy on absorbing large borrowings would be important, and of course besides that, of course, the entire commentary in terms of the liquidity situation, use of special OMOs would be fairly important. Market participants, or rather Nomura report recently also states that the new MPC members may in fact tilt the MPC into a more dovish to a neutral zone. For instance, a latest report by Nomura does state that the 3 MPC members are likely to tilt the overall MPC in a dovish direction. According to a Nomura report, Ashima Goel is possibly in a dovish camp, Shashanka Pire is possibly in a neutral camp, and Jayant Verma is possibly in a neutral to dovish camp. This is what the Nomura report states, and hence they do believe that although October would be a pause, but RBI may in fact cut rates by 50 bips or a cumulative 50 bips from December policy onwards. So hence the entire commentary in terms of the new MPC members would be important. And lastly, I would also mention that RBI's commentary in terms of the overall rupee, and where do they see rupee, the policy in terms of rate and as well as currency, would be fairly important for the market participants to be watching out for.